Hi, everyone. Thanks for tuning in for Technical Tuesdays. This is my first post, so I quickly want to explain why I'm starting Technical Tuesdays on my blog. Everyone's always asking me to do more shows on technical analysis, so I figured why not start a series on the blog? Thus the title, Technical Tuesdays. For now, they'll be the first Tuesday of every month exclusively on my YouTube channel. On Technical Tuesdays, I wanted to speak with people that are not only good at technical analysis, but they are actually trading the setups they're talking about. Each guest will either be trading for themselves or on the behalf of clients. As many of you know, RJO Futures is a sponsor of Futures Radio Show. So I figured what better resource than them to get traders and brokers to speak with. Cool fact about RJO. They've been around for over 100 years. RJO remains the oldest futures brokerage firm in the United States and the last surviving founding member of CME. Today I chatted with Adam Tuiaana, Senior Market Strategist at RJO Futures. Quick background on Adam. Grew up in Chicago and began participating in financial markets by trading stocks in 1997. Then moved over to RJO Futures in March of 2009. At RJO, he specializes in trend-following strategies in the currencies, metals, softs, and energy markets. In this post, I spoke with Adam about his favorite tools for technical analysis, which are trend lines and trend channels. But more importantly, I asked Adam what his edge is using trend lines and trend channels. Adam explains to us why he uses options on futures versus trading outrights. And he walks us through his process for entering and exiting a trade. Adam gives us his outlook for coffee, futures, and tells us how he'll be looking to execute that trade. Without further ado, let me take you right to my conversation with Adam. Adam, thank you for joining me on Technical Tuesdays.
Hey, thanks for having me, Anthony.
Thanks for being here. I'm very interested in learning about your process for using technical analysis and your trading. So let's just jump right into it. What is your favorite technical analysis tool and why?
Well, I have a lot of them, but my favorite would probably be the trend and trend channels. Those are my most relied upon.
And why are those your favorite technical analysis tools?
Well, in the trend, it gives me a good barometer of where things are happening and where prices have gone. It's kind of like my roadmap, and I can only assume that prices will continue in that direction. But a lot of us know that the trend is your friend. We've all heard that before. It gives me just a good overview of where I want to head, whether I'm buying or shorting something. I do rely more commonly on the actual trend lines to kind of plot where I'm going to be at and when my setup is going to take place and when I'm going to execute it and the type of options that I'm buying. So I would probably say out of the two, I'd rely more on the trend line, the trend channels than the trend line itself.
And like you said, Adam, everybody always talks about trading with the trend. It's such a general statement, right? We all know that. And hearing you say that your favorite tool for technical analysis is trend lines and trend channels, I'm curious, talk to us about what your edge is. Because to me, that's what separates someone who's just looking at trend lines. Everyone can see the trend line, but actually identifying an edge and putting it to work. So what is your edge using these technical tools?
Sure. Well, we all know when we're talking about trend channels, for example, we all know from a basic perspective, at the top of the channel, we should expect some resistance. At the bottom of the channel, I'll expect some support. It does let me know where I am within the overall trend from a high-level perspective. But when we get into the granular level of things, we need to keep in mind that with trend channels, they are, in fact, if we look at them, they're the center of the trend channel, and the center of the trend channel encompasses the actual swings within the trend itself. So since I'm an options buyer, I actually use trend channels to forecast the path of the price action or the trajectory, and will then project that path outward to be able to forecast when prices may arrive at my options strike price. This way, I'm a lot more comfortable in knowing which option strikes are reachable and which ones are really not doable based on the intermediate trajectory that I'm seeing from the actual trend line price action.
All right, let's dig a little bit deeper here. Walk us through an entry. I'm curious, as an options buyer, I know on the future side, I do a lot of scaling in and scaling out. I'm not very active in the options. I pretty much get all in at once when I'm trading options. But so I'm wondering, do you scale into your options, or are you getting in all at one time?
I'm all in at once. When I see a setup, and I do utilize a trend line for that. I use support and resistance and several other indicators, but just I will look for specific signals, and because of timing, I usually want to get in when I want to get in. And when I see that it's an option that I want to buy, and I feel that the volatility is there, and I feel that the options that I'm looking at are within the path of my trajectory based on the trend channels that I'm using, then I'm all in at that point.
All right, Adam, what I want you to do is walk us through an exit, because like you said, you're primarily buying options on futures. So I'm curious, when you're buying these options on futures, like you said, you get in all at once. How are you exiting these trades? And also talk to us a little bit about how you're managing it when you're in it.
Yeah. So I know on the future side with stop loss orders and trailing stops, I mean, that's a great way to manage risk and protect profit. On the option sides, we do not have any stop loss orders on options, of course. So we know that we pay premium up front. And of course, we don't want to see that premium dissolve. And one of the worst things that can happen is when a market does move in your direction, then all of a sudden, you add value to those options, then all of a sudden they start to depreciate because the market starts to move against you. We have to have a plan, and we do have a plan to basically manage that. What we do is we utilize a free trade strategy, is what it's called. So basically, this allows me to buy an option in equal numbered pairs. I'll give you an example. If I pay $200 for an option, I'll do no less than two of them, and I'll do them in equal numbered pairs. So basically what happens is when the market starts to move in my direction, and that option appreciates in value from $200 in premium to $400 in premium, I will have the discipline immediately to sell half of that position, and that way we retain 100% of our initial premium. There's no longer a premium risk at that point. So we've accomplished two things. We protected our initial risk, and that's no longer in the way. Number two is we've had discipline to get out of it as quickly as possible, and that allows us to adhere to discipline, which is another major factor. And then number three, it really drains us of the emotion in that trade. We are no longer emotionally tied to that trade as much as we would be if our initial premium risk was still at risk. So once that happens and we're exiting the trade, we'll actually leave that remaining half on until that half appreciates again and doubles in value. And then we will consider, and really at that point, some people have different preferences, but I will sell the remaining half of the position upon 100% again appreciation of that remaining premium.
So a couple of things. What's interesting to me is that you get all in at once, but then when you go to get out of a trade, you actually are doing a scale. You're taking half off, like you mentioned, and then, holding the rest for the potential target or even beyond it, depending on how confident you are in a trade. So I understand how you handle the winning side. On the losing side, if something's not going your way, what would potentially change your mind? And would that be an all exit scenario, or would you scale out in that situation?
That's a great question. So part of the trading strategy that I use encompasses a lower premium. So that's why I say that the options market kind of chose me, in that I'll shop around for options that are usually weekly options. They're short-term expiration. And they allow me basically to not have to pay as much premium. So when I initiate a trade with someone, and we're buying 2 options or 10 options or 100 options at $100, we intend on risking that $100 in premium on that particular option. So when it doubles, that's the only time that we're really scaling out of that, as you mentioned. So the premium risk, initial premium risk, is what we are initially risking and overall risking on that trade. So we're buying time essentially And that's why I like to keep the premiums light. We're risking 100% of that premium out of the gate. That's our intention.
Gotcha. So I want to go back to the beginning. You chose trend channels and trend lines. Those are your favorite technical analysis tools. You use options on futures, and you don't have a specific market that you're trading. You trade markets that you see the most liquidity in the options market. And so to me, that's your style, that's your strategy. So now what I want you to do, if you could please, is take us through a trade that you're currently eyeing and why you're looking at it.
Sure. We have a very close eye on September coffee. We have a bearish outlook on it. Now, if we look at a daily chart, and I'll include one, but if we do look at a daily chart of September coffee, the trend line has been down since November of 2016. So from a long-term perspective, ultra bearish there. Over the last 30 days, once we zero in on the intermediate trend, we see an aggressive sell-off since June 1st. So that gives us an intermediate trend that's down also. So we know we're pointing in the right direction. We were monitoring the 106.90 area corrective low from July 18th. And that area should have held some good support. We just violated that area today. With today's price action, we saw a low of 106. So after this violation, I'm going to look for a little bit of a pullback and approximately 40% retracement from this last sell-off. So a couple of things we come across at this point. We're likely to see a return move after some good support levels are violated, or resistance levels for that matter. We usually do see a return move. We pay close attention. Does it reach the 106.90 area again? If not, I'm ultra bearish at that point and consider, bearish positions with put options, long put options to manage the risk. And then if it happens to get a stronger pullback to the 108.50 area, which is like a 44%, 45% retracement, I'd be super bearish at that point. But ultimately, it's holding with the trend. And trend line projection-wise, there are options that are undervalued, that are down out of the money, that are affordable, that do have time on them. So that is definitely a market that we're considering from the short side using put options.
You mentioned support and resistance, and I'm curious, is that a confirmation that you're using alongside of your trend lines and your trend channels?
Yeah, absolutely. I monitor corrective highs and lows, typically again on a daily chart. So in an uptrend, I will alarm the last major rally high, which is my resistance level. And I'll also alarm where prices took a bounce after the last correction, which is my support level at that point. Whereas in a downtrend like the September coffee, I alarm the low before the corrective bounce, which will be my support. And I'll also alarm the rally highs of that correction where the price kind of hits a ceiling before resuming its downtrend, and that'll be my resistance. So any of these areas that are violated, like I was talking about that 106.90 area, when they're violated, I'm really drawn into the trade at that point. If it's a market that's not trending up or down, it's trending sideways, then I will choose to alarm the range highs and lows. And the longer the range, then the more volatile, based on my experience, the longer the range, the more volatile the breakout or the breakdown. So patience is another key there.
You mentioned that you preferred using weekly options. So I'm curious, what's your preferred time frame when charting?
I always take, since I'm looking at, since the options that I'm shopping around for are between expiration of 10 to 30 days, I will look at first starting with a daily chart going back a few months to gauge the overall trend from a high-level perspective. And then I'll go ahead and zero in with a 30-day look so I can see the intermediate trend. And that 30-day on a daily chart definitely will fit my trading strategy, and it's very suitable to that trading strategy when I'm evaluating and looking for options to buy.
Great stuff today, Adam. Where can people go to learn more about what you're doing at RJO Futures?
Yeah, you can visit us online anytime at www.rjofutures.com. We have commentary, we have webinars, we have guides, And all of our contact information is there. Reach out to us anytime. We're happy to help.
Excellent. Adam, thank you so much for joining me today.
Anthony, it's been a pleasure.